Welcome to the Real Advisor Podcast. TRAP. TRAP. Please follow us and join in the conversation on Twitter @Advisor Podcast, where you can suggest ideas and themes you'd like the TRAP team to discuss. Also remember to like and subscribe to our YouTube channel and leave a 6 out of 5-star review on iTunes. Doing all this really helps us, which means we can do more to help you. Now let's head over to the studio for the latest pile of TRAP.
Yes, indeed, dear Trappist. Welcome back to what many people are calling episode 80 of the Real Advisor Podcast. TRAP. TRAP. 80, 160 weeks. Shoot me. Joining me as ever in the digital studio of doom are the three other horsemen of the apocalypse. Alan the Storyteller Smith, Carl Delavocci, the Voice Widger, and Andy Ultra Heart. Now, gentlemen, we have a show packed full of absolutely nothing. So let's start unpacking it straight away with a high-energy review read read out by my very good friend, the Right Honourable Mr. Andrew Ursane Hart.
Thank you very much, Nicholas. We're all back in our home studios after the summer madness. This review is entitled Lovely Stuff, 5 stars. Started listening to TRAP a month before launching my own IFA firm 2 years ago. Immediately booked onto the DFA course, took away all of the hassle of working out an investment proposition, allowing me to focus on the important stuff. Never underestimate the impact you have on the community. Heartfelt thanks to you all. Sound quality excellent too. Grinning face emoji. That's from Greg Bowler of Medhaven Financial Planning. Greg runs a great firm and is a cracking guy, so thanks for leaving that review for us. We are now officially out of reviews for me to read out, so please leave a review and you'll be the next one that I read out. So we are desperate once again, so please leave a review. Thank you very much. Over to you,
What's the best place, Andy, to leave a review? Is it still Apple?
Apple, iTunes. Yeah. Sorry, Apple Podcast platform that then sort of filter through to iTunes,
it's a bit
I believe.
Of a faff, isn't it? I know
it's a bit of a faff.
It's
Yeah,
not
and you've got an old username, borrow your son or daughter's iPad and open up the app and help us out if you've got an Android.
It's funny he mentioned
Otherwise, next time there'll be
good.
no reviews.
Because the last review, I think, made a point about the sound quality not being so great. Maybe he was being sarcastic. Anyway, thank you, Greg.
No,
appreciate that.
Definitely being sarcastic, Nick. Definitely being sarcastic.
Yeah. Okay. Please do keep them coming in. That was from September. Yeah, from September. Okay, from this month. Wow, 11th September. Well, that's a date. Okay, good stuff. All right, let's move on to the topical tidbits. Put a timestamp on episode 80 of the Real Advisor Podcast. We've got loads to get through today. We have a guest joining us later on, but before that guest comes on, let's see what's been going on in this thing of ours. I had an email. I'll keep this anonymous, from a Quilter advisor, a young advisor at Quilter, on the ongoing retreat from the ESG. Some would call it a grift, others would not call it a grift, and those that wouldn't call it a grift would be wrong. And this email said, this is Quilter's words, the responsible investment questionnaire is being retired and should no longer be used with clients to explore responsible investment preferences. Please delete any saved versions you have. Instead, focus should be on the issues and factors that matter most to the client. And the advisor then says, one of our requirements was to take the client through the 3-stage mumbo-jumbo questionnaire. Good work. That establishes attitude to risk, passive versus active, investing preferences, and finally ESG preferences. The questions were all incredibly leading towards active management and ESG dedicated funds. And then the advisor says, focusing on issues and matters that matter most to the client. Imagine that. So credit to Quilter for being another brand that seems to be pulling back from this nonsense. And I know that I don't think you, Carl, but certainly in the UK, all advisors were under a regulatory obligation to ask clients what their ESG preferences were.
Yep, same here.
Yeah, same there. Okay, fine. How much we actually adhered to that, I do not know. You can probably imagine my process for this. It's a good way to weed out the weirdos if they brought it up, and I certainly wasn't going to bring it up. But it's with BlackRock and Vanguard and these other companies now definitely pulling back from this. So for me, that's a good thing. Any thoughts, Packers?
My understanding is it remains a regulatory requirement to at least
it does.
Raise it, identify it. Is it an issue? It is such a leading issue. And it depends how you frame the question. Do you have any concern about your children or grandchildren?
He's going to say no.
You know,
Yeah.
you're shamed
Yeah,
into
but
saying yes, of course. But in that
Do you
case, we
like
have this-
breathing? You like breathing, yes.
Yeah.
Yeah. That's
The future.
frame it for how you frame the question. You can tick the regulatory compliance issue by framing the question whatever way you want. And I suppose some people were framing the question to lead them down that ESG route in the past, but I guess not so much now anymore.
Yeah. Well, they got this, as the advisor says, the clients were all incredibly leading, not just towards ESG, but also active fund management, which of course is generally more profitable.
I mean,
for
what
everyone concerned,
would that
except the client.
question? What can you imagine that question would be? Do you want someone to actively review a portfolio, take a decision on your own behalf, or just track the index, which goes down?
The alternative sounds so much worse.
Yeah.
But in reality, it's going to beat it, night and day. But anyway.
Yeah,
It's
yeah.
interesting how these. I mean, Quilter are huge, aren't they? One of the biggest companies. I think are they maybe second only to SJP? There's a size, scale, number of advisors,
very big,
etc. So they're huge, and so you imagine how they kind of channel clients down particular routes, which are potentially more beneficial to the organisation just by framing questions. Quite an interesting one.
Yeah. Yeah, and the active thing is still so. I think because we swim in our particular bowl, that we sometimes lose sight of the fact that the active fund management side is still massive. As I put in our WhatsApp chat, I listened to a podcast from the chief exec of True Potential, and he was blathering on about how he believes in active fund management and how it can defend against market volatility in those periods of uncertainty, and all the normal claptrap, and True Potential are not. These are not penny ante sort of players. And Quilter, these are
big companies
handling millions, billions potentially of money. Okay,
I imagine you're an advisor working for them. Yeah, exactly.
Indeed, and incentives matter. Where's the profit margin in active fund management, not in your low cost 10 bips global equity tracker. Right, Wodge, give us some more good news from your side of the Irish Sea.
Yes.
He's not even spoken yet.
That always goes on longer than I remember. Sorry.
For a change.
This could be a good news story.
I've written a load of notes on this.
Oh,
so I'm sticking to facts that were written by other people. I'm not going to give much of an opinion. However, you will know what my opinion is as we go through this. So on the back of Solar 21, do you remember I spoke about that a lot? Mm-hmm. And Black Bee and Dolphin Trust and basically the low note scandals, I would say, that have gone before. A new one. And I have to admit, I hadn't heard of these guys. And then everyone was like, you what? You never heard of Arena Capital. So I have shared an article from the Irish Times about this particular firm. But there's actually another much more detailed and in-depth analysis done by Tom Lyons of The Currency, which people in Ireland can have a look at if they're subscribed to The Currency. Tom loves a good financial scandal, and he does a mega deep dive on a 57-page affidavit that was produced at the High Court last week. Basically, Arena Capital, following on from the Solar 21, they were doing wind turbines, and they were buying and selling. So we could tie this in with the whole ESG theme, Nick.
Yeah.
Anyway, they were raising finance to buy wind turbines, and don't ask me any more about that, but they raised an awful lot of money. And there is still 112 million outstanding in loan notes to investors. Mainly, it seems, through pension funds. Now, these loan notes, this money was raised through the intermediary market, so the IFA market, as you guys would know it, in Ireland. And there were 190 intermediary firms who raised the money via their clients to give to this crowd, Arena Capital. And they've run out of road. And they have a deficit at the moment of approximately 65 million. So this isn't something that can be fixed anytime soon. They've tried to put themselves up for sale, and that failed. So now they're gone into interim examinership. They were promising the loan note holders 10% returns. One thing that was interesting, a lot of the other firms were kind of raising loan notes for particular projects, but Arena Capital were raising it, and it was specified in the small print that they could use the money whatever way they want it. So, look, this is going to have a deep impact on an awful lot of families. There are, I think, something like 1,100 investors or something like that. It's like this is wide ranging. This is significant, and I think the average case size is fairly big. I'm told this isn't in either article, but I have it on good faith that the commission for Arena Capital started at 6% and perhaps went up if you went through various thresholds. That's hearsay though, so I'm not saying that's a fact. Of course, if you did a pension product to facilitate this, you might well have been paid commission by that pension provider also. Now, in the affidavit in the High Court, one thing that was said, which is probably the only little bit of good news in this, and obviously the 190 advisors have a shit show on their hands and they have a lot of explaining to do, and the clients who invested are looking at catastrophe. In a lot of cases, this will be their entire life savings.
Jesus.
But interestingly, they said that their mode of operandi was to raise finance from basically the intermediary market, so from brokers, and that this dried up in 2023 and almost entirely in 2024. So the small bit of bright spot news here is that maybe clients, but definitely brokers, intermediaries are basically going, here, we can't do this again because of the Solar 21, because of the Black Bees, because of the Dolphin Trusts, etc., etc. There were, in the deep dive article, there are some strange transactions. It seems that they stopped paying people back in September 2024, but some people, they don't know based on what criteria, were paid back since then. So they defaulted, but some people actually got made whole again. Look, it's crazy that this is going on. It's crazy that in 2020, 21, 22, 23, there were regulated advisors selling this type of unregulated product. Let's call it out, getting paid big commissions and foregoing what was always going to work and what will always work for their clients, which is basically index investing into the long term. Of course, that's not lucrative. Straight off, you need to have a long-term relationship with your client in order for that to work well for your firm. I'm not saying everybody did it only for the money. I'm sure there are some just got, totally sold on it and thought this was a great idea. But once again, we have a scenario where 190 firms, that's kind of 15%, I think, of the firms in Ireland.
I was going
to ask you what that represented. About 15%. It's not. So it's not a tiny number. Like there's just a few outliers. There's a lot of businesses.
No, and it's and look, there's a lot of chat in the background that I think is factual and probably will come out. I'm certainly not going to share it now. I'm not going to be the one sharing it, but some of the stuff going on, wow. Oh my God, this is just unbelievable stuff. So it's really sad. And look, my heart does go out to the families who are involved because there are people, their lives will be destroyed by this. They really will. So hopefully we've seen the back of low note unregulated investment by regulated advisors.
Smithy.
I've got a question and a statement. Does the equivalent of, in the UK, we have effectively a compensation scheme, financial service compensation. Do you have similar in Ireland?
Yes, we do, but it does not apply to unregulated investments.
Okay, so those people, if they're wiped out with no recourse, lost all their money.
Yeah.
No chance of recovery, or sounds like very little chance of any recovery. Well, interesting, because remember in the UK, we've got the FSCS, although it did cover, or was attempted to cover, non-regulated investments.
Seems like it covers a wide remit.
Remember the mini bomb
blow-ups.
scandal a few years ago? There's London Capital Finance or something. They were completely unregulated, and yet, if I recollect correctly, fair amount was paid out to investors there. Okay, there's that. The other thing, the statement I've got is this, and I just think broadly speaking, this is really important, excuse me, for anyone tuning into this or listening into this, is to have a documented investment philosophy. So you have you just, and it could be one page, it could be like in our case about 500 pages, but there's a simple way of just saying, does this, this would immediately fail the very first question that you ask.
Yeah, but Alan, the people that are going to flog this kind of
determine or discuss?
They're not going to care. They're not going to have a document. They're not. There's something to change them.
Yeah, this is
no. I agree, but there's others listening. None of these people, if they're so focused, and we are speculating. I didn't know anything about this until earlier. If it's driven by commission and receiving the highest possible commission, there's no help for you. That's
the bulk of it. That these 190 firms.
You don't know that for sure.
Some have a clear investment philosophy.
Some might have been sold to a slick presentation, and wind turbines are the future, and blah blah blah. We're going to do this, and I do remember my early days in the business getting on the receiving end of some what looked on the face of it to be quite exciting, interesting opportunities. You thought, maybe. And I didn't really have a framework. I just trusted my gut in those days. Remember all the film partnerships and what have you?
Yeah,
which
we just in India and
I just thought I'm not sure, but a lot of people did fall for that in the UK.
Say if that was the case, Alan, in the you'd have to do your due diligence. Say if you said, okay, for someone's playpen, we're going to have cryptocurrency and these wind turbines. If you're ES, right? Okay, and I could say, I wouldn't agree with that, but okay, if that's the way you wanted to go, I can see the argument around that. But then if you did your due diligence to say you have no recourse on any particular asset or particular project, we're going to be allowed to do with it whatever we want. And we had a famous case way back, well before the Solar 21 and the Black Bees, Custom House Capital. And basically, they were moving money between projects as they saw fit, which they said they weren't going to do, but that's what they were doing to try and save various projects. And that's why the whole thing went, the Custom House Capital thing went pear-shaped. And I said this before, right? I remember back when Custom House Capital were on the go, and we were all, those of us who went, it just doesn't seem like a good idea. We were idiots. We were absolute idiots because they were selling to the rich and famous and they were making so much money. And anecdotally, I'll stop there. I won't go with my anecdotes, but there's some of the stuff that was going on. And look, they do have a Arena Financial Services division as well. So they have an IFA that was one of the biggest producers of this, according to the article. Anyway, look, it's just really, really sad. Have your investment philosophy, stick to it, and that will.
The trouble is, Carl, it's a sad indictment on the Irish financial services industry. That's the problem. You unfortunately are tarnished with it because you're running a great business in Ireland. But to an outsider, are you one of those guys? Did you sell that as well? Doesn't do any of us any favors.
But look, I'm going to talk about the FPI conference shortly. There are loads of great people as well. There really are, and I think we will all together drag it, kicking and screaming into the new world, and with the right way to do it. So, this one is going to play out, and there's going to be more news on this one for sure.
Okie dokie. All right. Let's try and bring some good news. We can't really alter with this, can we? Go on.
Moving on from the unfortunate to the trivial. So a very brief story. The sort of the talk is AI is going to replace everything. AI is going to make things immediately in lightning speed. Yeah, it all sounds great. And then the providers get involved. So this is a provider story. I was doing a pension switch for a client. It took ages to get everything together like it always does. And right at the last minute, they said, the postcode doesn't match for the client. We all obviously looked into it, spent a bit of time. Does the postcode match? We looked at it and we said, we think the postcode does match. Well, basically what happened is in the UK, there's a certain way to obviously, write postcodes. So we've got 3 characters. We have a space, then we have another 3 characters. That's typically how these postcodes are written. Sometimes it's 4, then space, then 3. Anyway, it turns out the provider had the postcode as 3 characters, no space, 3 characters. So the characters aligned, but we submitted it with 3 characters, a space, and then 3 characters. This has delayed it till this day. This is a major, well-known provider. So their only issue about the postcode didn't match was we had a space, which is the correct format via the Royal Mail. They didn't have a space, and this has now been delayed for this long. You couldn't make this up. I was telling this story to another financial advisor, and they said, "Yeah, we've got a weird one at the moment." I said, "Yeah, go on and hit me." They said, "We got a client whose name is Ewan, as in EUAN." He said he rung up a major known provider recently to try and get some information. He's been with this provider for 20 years. And about 2 years ago, someone on the system changed his name from Ewan to Evan. So they've got him as Ewan for 18 years and Evan for 2 years. He cannot speak to them about anything now. They will not speak to this client because he's not the person on the system. He's Ewan. All the details are the same. They've sent stuff to his house. But because he's been Evan for 2 years, they will not deal with this client now. He'll have to do a change of name. He'll have to just... Anyway, so that's my... just insane stories that providers come up with to delay
corner
things.
Could be a new section.
Postcode corner. And you've got a similar story, haven't you, Nicholas?
Not dissimilar at all. So our clients live in the same property for years and years and years, but a couple of years ago, the local authority changed their postcode for whatever reason, the last 2 digits of their postcode. The client didn't tell his pension provider. Why would he? So the client's pension provider's got the old postcode. We're now doing a pension switch, and it's just going back and forth because, and all you got to bloody do, pension provider, who starts with art and ends with most, all you got to do is Google it, and the bloody address will come up with the new postcode. I mean, for Christ's sake, is at your fingertips. Anyway. Okay, Carl, come on, bring up some good news. You said there's some good guys, and we know there are some good guys and girls. Don't forget the girls. Good guys and girls in the Irish advisor community, and I understand that you are getting together. So actually, I've leapt an item here. I'll come to that very quickly. Transact have launched a podcast, and the first 3 episodes are out, and I listened to it. And in the very first episode, the CEO of Transact, Tom Dunbar, guess what he mentions? The very first podcast he refers to is the Real Advisor podcast, and how he shares clips from the episodes to the management team when he thinks it pertains to their business and the platform market.
Wow, he's big cheese. You know, he's CEO of a FTSE 250 company. He might
he's definitely not going to clip the thing about postcode space, but that's never going to be.
They are the provider that are helping me with this. They are the provider helping me with this madness.
I think that could be a new theme amongst the boards of many FTSE listed financial services companies, Carl. I think you do.
Yeah.
Okay, so that's good news. So thank you for that, Tom. Appreciate the shout out on that. And while we're there, Smithy, you've on the same line putting about the DFA movie. So
it was just sort of sharing content. Other friends of the podcast, we've mentioned this before. The Dimensional Fund Advisors, the long-awaited, this film that's been around for a while now. Nick and I went to see it at a cinema. That's how our lives go. But it's now available for mass consumption on YouTube. The Dimensional story called Tune Out the Noise, I think, which is worth an hour of your time. The link is in the show notes. That was it. Over to Carl for some great news.
Is this am I now talking about the Financial Planners
You are now
of Ireland
talking about the Financial Planning Conference.
So the Financial Planners of Ireland, I know loads of the people involved in this. You basically have to be a CFP to be involved. So I'm not allowed to go. and rightly so. And absolutely 100% rightly so. This is run by volunteers. I know plenty of people on the board. I think there's 5 of them on the board at the moment. They have their conference coming up. A bunch of the CFPs in Metis go to it every year, and they always come back and go, do you know what, this was bloody brilliant. This year they have an Olympian talking at it. They have a father and son team coming from the States who, with 14 staff, run a firm with 2.2 or 2.4 billion. I definitely want to hear that story, right, for sure. But look, if you are a CFP and you're not going, there's a link in our show notes. You should get on, register, because apart from anything else in terms of the guests, and they have loads of great guests lined up, you will for sure meet all the people that I just said are going to drag this whole profession into I think their theme is looking forward to 2030. Even that theme, that name itself, right? Well, there are people looking into, like, that's still short term, isn't it? Right. But in our business, for the product sellers, that's like, oh, what are you talking about? We're looking at the next quarter. These people are doing financial planning the right way. They've done the exams. They're running it on a voluntary basis. Fantastic people. Get there, get your ticket, get there. You're going to meet loads of great people.
Okay, great stuff. Wow.
Following on from conference
you've just come back from, it's your hand raised. Sorry, go on.
Oh, no, sorry. Yeah. Following on from conference recommendations, I've just booked the CISI conference on the 2nd and 3rd of October, just outside London. So if you're interested in going, they do a 2-day session with a black tie event on the first night. It's always good. So do check it out. CISI 2025 conference. Over to you, Alan.
You're muted, Alan.
It's like I've never done this before. That conference you're talking about, it reminds me of what used to be the Institute of Financial Planning in the UK. We go back to my early days in business. I think, Andy, you might have gone. Not sure if Nick.
Yeah, well, many times, Celtic Manor.
Yeah, so it was exactly that. That was the original, the kind of CFP bods, and it was the UK version of that, the Institute of Financial Planning. Brilliant. I mean, there was a real community was built up for that. And I would say is kind of a lot of the foundations of the modern UK financial planning community were based in there. And you still, some of the faces and names that we still sort of know to this day were, originally early stage, just sort of forming, discussing, sharing thoughts and ideas. It was a great community for many years. Unfortunately, as I understand it, the Institute of Financial Planning failed to plan their finances as an organization, ran into a bit of trouble, I think, and ultimately were consumed by the organization that Andy just referred to, CISI. So I think if you and your colleagues able to get into that at an early stage, it's really exciting to be part of that early stage of a group of community. There's not many people like you. You're all sharing thoughts and ideas. So I'd endorse that from a UK perspective, because I was part of that early stage community out at Celtic Manor, as you say.
Did you ever go to Celtic Manor, Nick, or was that above your station?
No, I drove past it the other day on the way to the Brecon Beacons. It's a very impressive building, isn't it? A hotel complex. It sort of stands on looks like it's a whole cliff edge building. But no, I had to have a good reason to go to Wales, and that wasn't strong enough. Right. What's next on the agenda? I think it's it's a storyteller. PCLS.
Okay. Just interested, just raising this as a thing, interested in you got UK guys' observations. It happens every year, let's face it. Pension commencement lump sum, tax-free cash from pensions in old money, as we call it. There's a couple of things. So there's a budget now, or the pre-Christmas budget, I think we'll call it. A couple of weeks before Christmas, we've got a budget this year. So there's intense speculation now, more so than ever. As I say, we have it every year and we dismiss it every year. But with the incumbent government we've got right now, it feels like you wouldn't put anything past them to look at ways to extract taxation. So all of a sudden, it's maybe a little more real or relevant to those who've got pension funds and they have the ability to access their tax-free cash sum. That's one aspect of it. The other is, of course, and I've just chatted to a colleague in the office the other day, talking about clients who have got capped tax-free cash sums. Can't remember the number, 260. You experts will know. 263,000, 268,000. Come on, Nick, you'll know.
It's 268 something. 268 213. It's a bizarrely strange number.
So if you're at that level, or that's the maximum you can get. The advice for many is just take it out. Take it out now, because it can't grow. You can't get any more tax-free cash from it. Why don't you take it out now, allocate it to another investment account, and allow it to grow? That in certain circumstances,
clear cut.
I know it's not black and white, but there's certainly a number of instances.
268,275.
Yeah,
just Googled it, did you? But there's definitely certain circumstances where people would be doing that. It's just interesting that there is definitely a much higher level of interest because of Rachel Reeves, her forthcoming budget, and everything else that's going on. Country's in a fiscal mess. Wouldn't be a bad thing. And what do you do to a client who says, look, I just don't want to take the risk. I hear what you say, boys and girls, but why, bird in the hand, I'll just take it.
But that's fine. If the client says that, you say, listen, I would suggest you don't do that for X, Y, Z reasons in your situation. But at the end of the day, it's their money. Crack on.
The data is, just to be clear on that, the article that I posted a link to, 13 billion. That's not a small number. 13 billion has been withdrawn already in, I think, this year from...
I think it was a higher number, Alan, referring to your article. I think it said 18 billion compared to 11 billion last year. So there was a massive increase.
I stand corrected. 18 billion.
Yeah. Well, this is the big... For me, this is a big thing at the minute.
7 billion,
and
Alan.
I'm sure we're all think about this in different ways. There's a confluence of things going on here because, of course, in April 2027, pension funds are going to be pulled back into the inheritance tax. When?
Yeah. Yeah, that as well.
But that's too. You've got a while till that comes along, and you take your money out of your pension fund to put it into your estate. Now the sod's law is that you die the next day, and suddenly 40% potentially of that PCLS is going to be taxed at. Is going to go in inheritance tax. You bring it out of a tax-free environment into a taxable environment.
It's so complicated.
Yeah,
there's a lot of
highly
the client's health
individualized
matters. It's not a black and white thing. It really. This is where
no
full
rules of thumb
financial
now.
planning
There's
is
no rules of
essential.
thumb.
Do
Yeah,
both
it
of you
used to
want to
be
talk?
rules of thumb.
Both of you want to talk under me simultaneously? Because that would really help this
we'll
flow
talk
even
over
better.
Yeah, you carry on
Over
talking,
you
and
or
I'll
under
just talk at the same time.
Go on, crack on.
There's, again, this is anecdotal, just our own sort of small sample set experience, that it is a challenging environment for many people in the economy. And I think some, affluent parents are using this as an opportunity to gift funds to their children, sort of kids in their 20s, maybe 30s, and withdraw access from their pension lump sum and hand them across as part of a sort of multi-dimensional inheritance tax planning, gifting, removing money from the potential clutches of Rachel Reeves, etc. So yeah, it's not black and white, but the rules you used to always have a kind of basic rule of thumb: leave your pension, leave it till last, don't touch it, etc. All bets are off.
All out the window
There's
now.
a lot of things
Everything
going
is
on.
tailored. Everything is
But
tailored.
that's a big number though to be withdrawn. 18 billion. If it's up from 11, that's a hell of a move in the last little while, and I'm sure it's really affecting you percentage of assets fee model, boys. But that's another story. All right, Nicholas, you can talk now.
Thank you. Permission granted. Wodge,
Yo, what's next?
Irish Life, for Christ's sake.
Yeah, Irish Life have launched a gold fund. So I just had a little wry smile. Like, Irish Life investment managers have done absolutely nothing wrong whatsoever by launching a gold fund, because gold has obviously gone up and up and up and up and up for the last year or so. But it just, I just had a little smile that, this is what the investment fund managers do. They chase the money, don't they? That's their job. And, whatever is doing well, right, let's get a fund and let's try and track that, because, will gold continue to rise? I don't know. Do some people think in their investment philosophy they should have a holding to gold? They do. I wouldn't believe that that's the right thing to do, but I'm not going to diss anybody who has that as part of their investment philosophy. So maybe having a liquid gold fund out there from Irish Life is a good idea. But look, it is. I'm just minded of when, I came out from my broker consultant days and I had the brainwashing from the active fund manager I worked for. And I really did believe their story. I really 100% believed their story. And I thought all of the brokers I was talking to at the time that I was telling them the truth, because it was my truth. It's just really incumbent on and really important that everybody decides what I mentioned it again, what's their investment philosophy, and then you kind of stick with it and don't go chasing what is the next best thing, even if it's an old type of asset like gold. Because I could see younger advisors going, yeah, maybe that's the right thing to do. And if Irish Life are coming out with the fund, well, Jesus, I better get involved with that. Have your philosophy and stick with it.
So how much of the Metis 100 fund are you allocating to this new gold fund, Carl?
We haven't changed our investment philosophy since I met you boys back in 2018.
Change
That's
your life.
fact. That's fact, though.
Brilliant.
That is a fact.
Yep.
But here's the thing: you don't blame Irish Life. They are what I refer to as
the business they're in,
institutional asset gathering machines. And so whatever's flavour of the month, and it absolutely is, and the gold is at an all-time high. So therefore, as always, rear view mirror, so people then will pile in right now.
Yeah.
And that's why I mentioned it before, and you just alluded to it there, Carl. If you've got a clear documented investment philosophy, you won't. You can make Ray Dalio and people, other sort of so-called experts, do make a compelling case for gold. But within our investment philosophy, we've documented what position does it hold. Is it for defensive assets? Is it for growth? And so it's positioned as a growth asset, an inflation sort of protection. Is it the best growth assets available? And it's not. Looking, using history as our guide, using the data, it's not. Therefore, because we've got documented philosophy, we can't jump on the latest bandwagon. But, you know, we talked about ESG. We're talking about gold.
Crypto.
There'll be something else around next week.
Yeah, and look, just to reiterate the point, right? It is like Irish Life should be innovating like this. They've done nothing wrong. It's just, you know, can the people advising the clients, have you got your philosophy and are you sticking with it? Anyway, won't flag a dead horse. I just thought.
Oh, I don't know if you're coming back and forth on the microphone, fella, but your levels in my ears are going down, up and down. So are you moving about much?
Yeah.
I don't think so. Let me see if I can fix that.
Right, let's quick. We've got to crack on because our guest's waiting in the lobby. We're already 35 minutes in. Ultra. Do we need to ask how much of a success Hum South Africa was? I'm sure it was the best conference ever, surely.
Yeah, I'm still on a bit of a high coming back from South Africa. It's always a bit surreal, obviously, running a podcast the other side of the world, the other hemisphere. But there was lots of trap fans out there, which is also pretty insane, coming up to me during the break saying that they listen and how are you boys doing and having a bit of a laugh. But no, it was really good. It was at the V&A where you boys have been, Carl, not yet. It was great. Went really well.
Yet?
Yeah, there might be an Irish trip brewing 2026. I'm running past a few people.
No, Carl's too big a name now. You should have asked him 2 years ago.
I should have got him 4 years ago.
I get the kind of invite around this time every year in the week or two after.
Then it kind of goes again.
And then it just goes all a little bit quiet.
But no, it went really well. I went out with 2 UK advisors that are doing great work in the UK, Keith Button of Boost and Scott Miller of Finova Money. They both did great talks. All the speakers got very high scores. We had a world champion public speaker. She got a 9.3, which is one of the highest scores we've ever got. Anyway, it was all good. But not resting on our laurels, always trying to put on a great show. Now I've got my full focus on London, so we're about 6-7 weeks away from London now. But yeah, all was good, and thank you all for anyone who's listened to this that came out to Hum SA, and yeah, big thank you. So that's it.
Are we all going to Hum London? I booked my flights this morning, Andrew, so I will be there.
You'll all be going.
Present.
It just depends on
when's it on?
What time you arrive and what time you head to the pub. So
Are we going
Just
there?
go straight to the pub.
Should we pop
good.
off?
Well, Andy, seriously, it's a proper achievement, and the amount of things you're juggling is amazing. So well done.
Thank you very much, mate. Thank you
on pulling it off yet again. Okay, so on the IFA forum, tiny.cc/IFA forum, there's an ongoing chain. In fact, there's an email this afternoon about prospects who want to get references from existing clients. Should you do it or should you not? And I guess it all depends on the maturity or not of your business. I'm at a stage now where I just get new inquiries referred to me exclusively from existing clients. So I don't get asked for references anymore because the clients have come to me already, or the prospects have come to me already kind of with the reference because they've said, they've come to me via existing clients who obviously aren't that pissed off with me enough not to do so. So that's great news, but I just wonder what the thoughts of the Trap Pack are on this particular thing. To me, it's kind of a red flag if a prospect asks for client references, and I don't do it. But do you guys have any thoughts?
I do. I wouldn't see it as a red flag at all. In fact, I would. I'd probably do that myself if I was looking to invest my life savings. We have our client advisory panel who are happy to take calls from prospective clients at any stage. And I have done that third act series, which has been very successful because they are real stories from real clients over a 40-minute chat about their backgrounds or whatever. So we'd oftentimes send a prospective client a link to one of those interviews because we'd kind of go, they're a little bit like you. Have a look at this story from this client family. So absolutely not would I see it as a red flag. In fact, I would see that these people are very serious, and I would say, they're looking to get into a long-term relationship with us. So happy days.
Yeah, I take on board all the points. I don't do it now, but I have done over the years. I'm sort of with Nick. It's a bit of a red flag. Usually I've come highly recommended from someone. It's not a cold intro. But I understand why they do it. From your points, Carl, life savings are being managed. It's not, we're not selling flowers or something. So it is a big ticket item. But my point is, I often find it to be pointless. Just play out the scenario. I'm just about to become a client, Andy. I want to be introduced to some other clients that you're looking after that are successful. Yeah, no problem. I've got to call Sarah and Jane and say, right, I've got a new client. It's called Carl. He wants to speak to successful clients I look after. Are you okay to take the call? Yes, I am. I go back to you, Carl, and say, right, I've got these 2 names. Call them whenever you want. You may call both of them. You might call one of them. You might not call any of them. If you call them, I think they're going to be quite pro me because I've given you clients that I look after successfully. I'm not going to give you dud names. Yeah, call Terry. He hates me. I've done a terrible job for him. It's not going to happen. And then obviously, what I mean is just a big charade for busy people. And the names that are going to be proposed are going to be people that are pro you. That's my opinion. That's your opinion.
But no, you could do it much easier. So do exactly what we do. Our client advisory panel have agreed that we can hand out their number. We don't even ring them and say.
But not everybody has a client advisory panel. So
yeah, but everyone has 2 or 3 or 4.
I'll tell you how we.
And they get on
yeah, exactly.
Great with it,
so they're just going to be pro. They're just going to be pro me. They're not going to say he's done a crap job. It's a waste of time.
It's a little bit like I have a client who
There's more to it than that.
Yeah, he asked me about fees every year. Can we reduce the fees? And I go, no, right? And he goes, yeah, I hope you don't mind me asking. I just want to ask. And I'm like, totally fine. We're never reducing fees.
Ask away. The answer's still no.
That's why we run our own businesses. We do what we want. Alan, over to you.
We've talked about this before in our private groups. This is one where Carl and I agree, and you two disagree. I look back. Some of the origin story of this comes from Nick Murray. Nick Murray's very, very hot on this. He says it's a red flag. He says no one asked their surgeon, they're going for open heart surgery, can I get a reference? And I remember thinking at the time, you've got that's an entirely different thing. A surgeon in a hospital versus some random guy with a website that's going to take across their life savings. And it's not unreasonable. So I think that the thing, you're right, of course, we're all expecting the person or people that you give as a reference are going to say a positive thing. But it's more the process to go through to say, and they might wish to ask them, but what was it like? How often did you meet? Did you bring your wife along? Did you bring your husband? They want to know a little bit more about the process from it. And it's not as if, is he any good? Is he going to run away with my life savings? Is he going to put me into a wind turbine fund or not? Do you know what I mean? They want to know a little bit more from somebody who's got experience. And often it's just a box ticking, just the 95% there. I just want to get a little bit more confirmation, a bit of feedback. I don't think it's unreasonable at all. And the way that we identify that is when we take on clients, particularly if they've come from a referral source, when we have and we've talked about this before, when we have them in for our welcome meeting, and we often take them out and have a bit of lunch or something. It's one of the things that we'll kind of weave into the conversation. That from time to time, when we bring on new clients, they do ask us to have a chat with somebody. Would you be open to having that conversation? And almost everyone says, yeah, sure, no problem. Let me know. So you should have a ready bank of good people who are, the key is a bit like them, a bit like your then prospective client. And they jump on a call for 10 minutes. Just want to ask you a couple of things. And it's just a tick in the box. I absolutely don't see it as a red flag. I see it as pretty reasonable. But again, it's just a matter of opinion.
Okay, all right. I'm sorry to chivvy you on here, but I'm aware that we've got a guest in the lobby, and we've still got some items to get through. Just very quickly closing on this email chain's been going on for a few days now, and the same prospect has come back to the advisor concerned, already quibbling about the ongoing fees. Second red flag. So I think these things are interlinked. And the guys also said, you mentioned fundament and timeline. Could you tell me why you think this is a good solution for me? Because I'm on this other forum where some people are questioning. And it's like, my response, this is the biggest red flag since Chairman Mao's funeral. Get this waster out of your life yesterday. Right, let's move on.
Yeah.
Okay, so quickly then.
Shots.
So, Wodge, calls for new SSIA. No idea.
Yeah. I'll do this very quickly, and I just wanted to kind of bring it up. We have a budget upcoming in probably 2 and a bit weeks. The SSIA is our version of the ISA that we had for a period of time, and the government topped up savings or whatever. I've been banging on about it for a long time, and then people are now coming out saying that they've decided that this is a new idea. It's not a new idea. We should do it. It will help the youth of today get on the property ladder if it does nothing else, and it might start a Ireland on the wealth, driving our own wealth as opposed to waiting for anybody else. So we should do it. So let's just see. Will it come out? It probably won't.
Okay, thank you. Oh, gosh. Okay, very quickly. Specialist recruiter, storyteller.
Calm yourself, Nicholas. This is really important.
We have a guest who's got to go in 20 minutes.
You've put too many things on the docket.
Oh, I put too many things. Well, there's AS is against this, and then we've got AH, and then finally it's NRL.
I'm happy to nudge on with my story, Nick, so I'll get rid of it.
Thank you.
Yeah, can you? Yeah, you do. So no, this is really important. We get a lot of communication from often younger financial planners looking to maybe make a career change, look to another firm. They've been working in organizations that don't necessarily embrace the core concepts that we espouse at TRAP, and they're looking for advice. Do you know anyone else who's recruiting and hiring? So I was contacted. I've had a couple of calls with a recruiter by the name of James Barden. And what's different about James is that he was a financial planner some years ago. He knows the ropes. He's worked in our industry for a long time. And the key thing is about knowing what full fat financial planning actually is, and knowing if someone's looking to get into that world, just don't move them from company A to company B and it's out of the frying pan into the fire. So James is interested. It's a boutique. I think he's a one-man band, but he knows the industry, knows the individual players really well. So put a link to his details in the show notes. And if you are looking for a chat about maybe looking to work for a proper financial planning company, James is your man. And specifically, I've also want to mention someone by the name of Llewellyn Morgan, a good Scottish name, who runs a firm which has been, by his admission, influenced by TRAP, firm called Meredith Morgan Taylor. I think they're in the West Country. I think they're actually in Exeter, looking at their website. But in the West Country, they are actively recruiting. Got in touch with me, just says we are looking for a kind of junior type financial planner to come and join them. So I just want to join a few dots. If there are people in the West Country, if they are looking to work in proper financial planning companies, speak to James and or speak to Llewellyn. And I wish you well. Thank you.
Sounds perfect for you, Andy.
Great stuff. Okay, right. We're at 46 minutes in, and I think it's time we move on to the meat and potatoes of episode 80. And we have a guest. Who's going to enter the digital studio. A well-known name in this thing of ours. Let's bring her in.
Nick, would you put your hand down?
Hey, there's somebody at the door. Oh, there's somebody at the door. Come on, there's somebody at the door. Oh, there's somebody at the door.
Welcome, Cathi Harrison, to the Real Advisor podcast. How are you doing?
Hello, I'm good, thank you. How are you?
Welcome.
We're all good. We're all bitching with each other and
Working? Is
arguing.
my sound working okay?
Yeah.
Oh, good. So, I think I'm on a bit of a delay. Sorry. Okay.
Sometimes there is a delay.
So to our audience, you will be. I think you'll be pretty well known to our audience, Cathi. But in your own words, give us a quick 30-second summary of who you are and the 38 different brands that you represent.
I will. Sorry, there really is a delay here because I can see you speaking and then you stop speaking and then I hear it. So I'm really sorry if this is janky. But I am the CEO of Verve. It was a business I founded as a power planning business 16 years ago, and then launched a compliance business, then launched a training business, mushed them all together, and it became Verve as of 3 years ago. And separate to that, there's also the Verve Foundation, which is a not-for-profit that runs kind of alongside it. So there's technically only 2 brands now. I squished them all to make everybody's life a little bit easier.
Good stuff. Alan, I think you want to lead off the conversation with Cathi?
Hi, Cathi. Good to see you. We're bumping into each other at various conferences over the while, and it's great that you could come along and join us today, because I'm just from where we stand, you're doing a lot of really interesting things. I'd love to just spend a few minutes talking about I can't remember exactly what it's called, but the one that Haley's very involved with, this kind of incubator foundation type thing, because we've sent a few people her way or your way, but I think it's an opportunity just for you to sort of talk a bit about that, because from what I see, it's a really valuable resource for lots of for financial planners. So tell us more about what that's all about.
Absolutely, yeah. So yes, you have sent lots of people our way, so thank you very, very much. So many times have I interviewed people to join the incubator and they've heard about it from this podcast, so thank you guys. So the incubator came about, I guess there was 2 kind of parts to it. One is through Verve. We've got a compliance part and we work with firms or individuals looking to go directly authorised, which is fine. You can do all the boring regulatory stuff, but actually they just had so many questions about starting their own business, figuring out clients, figuring out the proposition. So we were kind of helping them out, but it was all very like one-on-one on an individual basis. And it felt like we could probably be a bit smarter about that, get everybody together, like help them kind of share and support each other. And then I think the other thing of it is because I've always started my own businesses in like a bit of a vacuum. I've never been in any kind of program, and I know very much as a business owner how lonely it can be. So we kind of thought, well, actually, you know, I really like small independent advice firms. I like to see things that are a little bit different in finance. I like to see people trying new things, which you just don't get that same level of sort of innovation, I guess, and testing stuff when you're looking at kind of the really big businesses. So actually, what could we do to help more of these smaller businesses get started and get up and running? And for those advisors considering doing it, for them to just feel a little bit less daunted by it. So that's where the incubator came about. So we're on cohorts 17 and 18 at the minute. So that's 880 businesses roughly that we've helped over the years, either initially considering it, so understanding their options, what it's, you know, the pros and cons of running a business, but then also DA versus network, and then actually helping them get up and running to the point then actually when they're starting to grow for the first time and maybe take somebody on. So yeah, it's been going amazingly.
I think that's a brilliant resource, Cathi. And just to be clear, you're getting funding and sponsorship from somebody, so it's actually it's free effectively. There's no actual money changes hands in order to get that. So
entirely.
It just seems it's a no-brainer if someone is thinking that. And I think what you said there, I think all of us were, I mean, two of them are still by themselves because they can't get anyone to work with them. But when you start off and you are by yourself, remember those days, Carl, before you get a few people around you, it is really lonely. And you think you've got a good idea, but you think, but maybe I'm mad and maybe can I just bounce it off someone else? And to have the power of community, it's really important to have other like-minded people on that same journey with you and just sort of shape your ideas. I think it's fantastic. Yeah.
It is. I think, I mean, firstly, the incubator in particular has been sponsored by Royal London, so I have to do a massive, massive thank you to them. Yeah. They just absolutely love supporting like the small independent advice firms. But it is that, I think sometimes, advisors, and I've always found it with paraplanners as well, like people in financial services, and genuinely so supportive. Nobody's there going, "Oh, it's my business. I can't tell you anything about it." Like, definitely. Everybody's very keen to kind of share and say, you know, there's not a single right answer, but here's the way that I do it. And also sometimes I find when you're on your own, there could be a question that you've got and you could spend like 3 hours going down a rabbit hole trying to fix it, or you could ask somebody and they've got it in 30 seconds. So it's that time save as well of like, you know, we've all been there and tried to figure this out. How do we just make it a little bit more efficient?
Good stuff. Carl, meet Cathi Harrison. Cathi Harrison.
Cathi. Yeah. I'm obviously very aware of Cathy's business, but we've never actually met. So hi, Cathi. I did have a look at the website in advance of today's chat, and there's a lot there. There's a lot of services that you're doing. But what I'm more interested in is finding out, because there's an awful lot of, and your incubator is doing this, is bringing kind of the younger folk a lot. So there's an awful lot of younger people watching and listening to this. What was life before 2009? How did you get to where you are now? And just a little bit about your backstory and kind of some of the challenges that you kind of met along the way as you built your business. And obviously you've brought all the brands into, as you say, kind of just one or two different brands now. So just to talk a little bit about that journey, how you got to where you are now, and give us a bit of insight around that.
Yeah, absolutely. So I, as everybody, fell into finance. So I went to university just after college. I was working at Royal Mail. I didn't think I wanted to do any more studying. And then kind of after a year, I was at Royal Mail for 6 years. But after a year of doing it full time, kind of thought, I don't think I want to be a post lady forever. So went to uni just for something to do. And while I was there, it was basically my boyfriend at the time. His ex-girlfriend had received an inheritance from her father who passed away. And I always remember it because he'd said, oh, you know, she's received £100,000 and she's going to see a financial advisor to kind of get some advice of what to do with it, because £100,000 was a huge amount of money. And I just remember thinking, I have absolutely no idea what an advisor would say to somebody. Like, I have no idea where I would even be getting if somebody, you know, suddenly came up with £100,000. And that's what kind of piqued my interest. So when I left uni and I was trying to find something to do, and I was thinking maybe I'll go into HR. I did business at uni, just nice and generic. But there was a job advert at a local financial advisor for an administrator to just kind of go in and start, scanning and filing and photocopying and all the rest of it. So I kind of fell into finance, but it was that conversation, and it was that realization that there's this whole massive world out there that I just know absolutely nothing about. And it was actually years later, I was doing like a business course. It was specifically a business course for women. And they did kind of quite a lot of coaching. And I'd said at the time, I fell into finance. And the lady there on the course, she kind of like really dug into my backstory and kind of where I'd come from and everything. And she'd said she doesn't believe for a minute it was kind of accidental or that I fell into finance, that it very much came from growing up very poor, no money at all, like absolutely just in a position that I never wanted to be in as an adult, and I never wanted my own children to be in. That what that did was triggered something in me that meant I wanted control over finance in future, because I had none of that control as a child. So that's why I was at Royal Mail, and I was kind of, I've always played around with like business in college and then in uni. There was something in me that was like, actually, how do I get this control in future that I never have to have kind of from the past, which I find fascinating, because I think when we talk about getting new people into finance, I think there's loads we can do as an industry. I think there's loads we can do to kind of, promote it in schools, education generally, like all the stuff that we talk about. But I also think we can't change somebody's internal perception of money and finance. And that's going to have a massive driver on the ultimate career they choose and whether a career in finance would even kind of be suitable for them. So, yeah, I think that answered part of your question, and then I went off on one.
Yeah, no, but it's
a great answer.
Yeah, brilliant answer. And it sounds like it's kind of, even if you didn't know it yourself, it's like it's a mission that you're on to try and educate more people, to try and get more people into finance and get to understand it a little bit more. So look, I think it's a great story. Like, when did you started off with the paraplanning first, and then was it just like that the others became kind of, well, these go hand in glove, so why don't I do this and why don't I do that? But at the same time, while they're hand in glove, they're also very different. So like, you have to set up separate divisions, I guess, and bring more people on, and that brings complexity. How did you cope with all of that? Because we are always talking about that, because Andy and Nick are probably, the solos, and myself and Alan are grappling with trying to have the different divisions and all of that kind of stuff. How do you find that now? But how did you find it as you were growing?
So I made it probably 10 times harder than it needed to be. So when
what
happened, Parasols, the paraplanning business, that was 2000 keeps it fun. Parasols was 2009. So then that was fine, and it was growing. And one of the things that we'd launched was a grad scheme. Because it got to the point where I was kind of riding this wave of everybody realising how much they need paraplanners, everybody really being open into outsourcing, which was absolutely great from a demand perspective, but supply was just impossible. Finding paraplanners up in Darlington, obviously way before COVID, we weren't really kind of having them scattered around the country. So we launched a graduate scheme, which we still run now. We have 2 new graduates start today, actually, and managed to get the domain name, thegradsscheme.co.uk, which was essential because nobody was coming out of uni and Googling paraplanning grad schemes, but they were Googling grad schemes, and then we were coming up top. Yeah. And then we just did this whole website, and it was all around like being a financial hero. And then it was, like WTF as a paraplanner, and just kind of really trying to get people thinking, oh, well, I don't actually know what paraplanner is, but this company looks fun, and then you buy, and, I'll kind of get in that way. So then the business was growing and it was doing great. And then in 2016, I went off on maternity. So I had my little boy. And, you'll know with kids, like when they're first born, they actually don't do anything. You just lay there asleep all day. So I was thinking, okay, what's the business's challenges in Parasols? Like what can I kind of fix? And one of the biggest frustrations that we had was external compliance providers. They drove me absolutely bonkers. Like, we do a great job. The advisor was happy. The client was happy. And then 6 months later, compliance would come in and just rip a file apart for their fee. So I thought about, I'll launch compliance. That's fine. But then what we actually did was polled our clients at the time and said, what do you think about a compliance service from us? And they said, theoretically, yes, we like your kind of philosophy and the way that you approach things. However, I wouldn't want to think there was a risk that my paraplanner was also going to be my file checker and they're marking their own homework. And, it's I need that kind of separation. So I actually launched Apricity, and I also thought, actually, at this time it's 2016, why is no one in compliance using any technology? Why is it all spreadsheets and files? I know we'll build a new company with a whole new piece of technology while I'm on maternity leave. And as stupidly, I thought it would take like 3 or 4 months. It took like 14, like 10 times the cost. But it did what it needed to do in the sense of going, it's a proper company, it's separate from Parasols. Like, yes, it's the same kind of ethos and the same, crazy person driving it. But actually you can use it as a standalone, you can use Parasols, or you can use the two. So I think basically the same thing happened with the training side, which was the art of finance, which then ultimately they've all got merged back in together, which is why I was saying I did it the hard way. The philosophy was right initially to kind of have that separation, and because there were still small businesses and maybe weren't as well known and weren't as well established, just trying to do it as a division wouldn't have worked. So it was clunky. It got to the point where I had 4 separate companies, 3 pieces of tech, 4 sets of accounts, brands, 4 separate teams, but ultimately all the same clients. So the whole restructure happened to make it a little bit easier for everyone.
Brilliant.
Wow.
Brilliant.
Ultra.
Hi, Cathi.
Fair
I'm
play.
going to jump in with a question. I feel your pain with multiple brands. My God. I think we've known each other for 16 years, Cathi. I think we met in 2009 in Moorgate. So a lot's happened with our businesses and lives in those years. But it's insanely impressive what you've created, and you've got an awesome place in Darlington with loads of people doing some awesome stuff. You've told us all about your history, the past. My question is about the future. What do you see the big challenges ahead? What are the big moves for Verve going forward?
Well, firstly, I'm a little bit alarmed because I do know when you mean Andy in 2009 in Moorgate, and was it when we had that photo shoot and I've got that red shirt on and like ginger bobbed hair, and it's just absolutely, I look about 15 years older then than I do now.
That was it. That was it.
So yeah, future. I guess there's a couple of things. So I think at the minute for me, there's kind of 2 core areas. There's the foundation. So the foundation very much exists to continue to kind of break down some of the frustrations and challenges in financial services, independent of anything commercial. So we've got Royal London sponsor the incubator. We've got amazing companies like Nucleus that sponsor our programs that bring new people into finance as well. So the different challenges we hear around, nobody chooses finance as a career, or it's really hard to start a new business, or there's education gaps. The foundation exists to help tackle all of those, and it's nothing at all to do with Nucleus's revenue, Verve's revenue, anything like that. So it's doing amazing. The support we've had's been amazing. I see that going much, much bigger next year. I feel like, again, it's been kind of proven. I think people can kind of see the impact that it's having. We've got, hundreds of new businesses and new people that have come into finance because of it. So it's on the foundation more and more of what we were doing. Verve side, there's 2 things again. The main thing with Verve at the minute is the restructure and the new tech to underpin it meant that we've got this ability now to just support advice firms as much or as little as they need. Again, it comes from being a business owner. I flipping hate having to sign up to 2-year contracts, 3-year contracts, terms of business for 10 different people, all these different direct debits going out, and you just don't know where things are. So the whole kind of philosophy with Verve is you've got single tech, massive team, but they're all specialists in their own areas. And as an advice firm, you just say, right, I'm going to sign up to some compliance. I need it for a couple of months, or I'll bolt on some file checks, or I need power planning for a couple of months, but then you dial it back down if you don't need it. And I think that ability to go to a single place and get the support your business needs is it's the thing that I would want for my business. If I could get my HR support and my accountancy support and my legal support all in one piece of tech, and I can just activate it when I need it, it would make it so much easier. So there's loads more we can do there. There's additional services we keep adding in. Some of them are by us, some of them are kind of third-party ones where HR being an example, like small advice firms need HR support. If they get it through our like Dexterra, our system, they're using a specialist HR company. It's not Verve, but we've trained them to say, from a HR perspective, this is like the FCA overlay. This is what regulatory references mean. This is how you should be doing contracts, for example. So yeah, building that out. I think building more of that and just pointing out a lot of the crappy old approach to services that I think advice firms have had to put up with for years and years. And just very soapboxy, but just people, they complain and they're frustrated about the cost of advice, the cost of compliance impacting on the cost of advice. But I think the cost of compliance is very, it can be very flexible. And I think it's been driven up by compliance providers not even wanting to try and help find a way to kind of make it a lot easier for advice firms.
That's a great response.
Yeah, you've so much going on there. It's inspiring actually. Yeah, but but I'm going to ask you a question too. Where does the growth of this business? Because if you nail, so obviously if you're talking about the tech, right? AI is front and center of that, and I'm sure you're all over that. So if you nail the tech, you can go to other jurisdictions. And I'm just thinking about the market I operate in. Your service is needed in Ireland. And it's needed in every other country because there's very few, as far as I'm aware, people, this is exactly what we're talking about. And I have spoken about this on this podcast, about bringing all the services as close together as possible. Well, you're squeezing them into one place so we can kind of take off a menu. We'll have that, and we'll have that. But because we're a smaller firm, we don't need that, or we're a bigger firm and we have that ourselves or whatever. So we can choose from it. So have you big growth plans? And I think you should if you don't. And I think dream big on this, because I think it's you obviously your enthusiasm and your passion for what you do comes across in spades. So you should drive this thing on. This is needed. This service is needed. I'm always talking about this, and it doesn't exist in Ireland, I tell you.
Thank you. Oh, that's really lovely. So how? I think I agree. I think it is needed, and I think it takes a bit of time for kind of businesses to get used to working in a different way. I think there's obviously always going to be some pushback, like maybe they still don't want so many different services in one area. Maybe there's spreading the risk of it being kind of across different providers. I also think, because I can't just kind of do more of the same. I'm just not wired that way. It's kind of how I've ended up where I am. And I still think that there's a different way entirely that financial advice and support and the ability to help firms grow and see more clients. I think there's a whole different way that can be, that doesn't yet exist, that maybe should exist. And I think it's kind of somewhere in between. At the minute, as an advice firm, you've got the option of going directly authorised, you've got all the risk it carries, you've got all the worry, you've got 8 million decisions to make before you can even, begin to see a single client. Or if you go down the network route, you go to it thinking maybe, it's going to get rid of all this kind of compliance worry, and actually they're going to make my life really easy. But in doing so, you give up some of your control, and you give up some of the kind of flexibility and the creativity. So I think there should be a middle ground, and I have been working on a middle ground, but I can't announce too much about that middle ground yet. But I think you take the concept of what we're doing at Verve and all these different services and then go, actually, how do you make it even simpler? How do you make it so that as an advice firm, you just go in, got that monthly fee, it covers absolutely everything. Ultimately, I'm still directly authorised, but somebody or, an entire company over here has just taken all of my worries away from me, I think is where I'd like it to be.
So there's big news coming, big plans afoot to drive it on and do it better, do it differently.
Always.
Fair play. Love it.
Suffice to say, Cathy's ambitious, and if and when they decide to open up in Ireland, Carl, you'll be the first person she calls and send you a contract.
She definitely should
to sign up.
Yeah.
Cathy, can I just ask you just for a little bit of clarification, because you've got so much going on. So in my mind, I'm just trying to. I know you've got the compliance business and the power planning business and what have you. And you've talked about the foundation, of which, if I understand, the incubator is a part of, but not necessarily all of it. So expand a little bit, if you don't mind, on what the foundation actually is and what it does.
So yeah, the foundation is the business, and within it there's a number of initiatives. So the Advisor Incubator is one of those initiatives, and that's everything that I've kind of described so far. It's all about supporting new independent advice firms. There's another initiative within it which is called We Are Change. So that's the one where, again, we've received funding, and what we do is go out and say to people, have you ever wanted a career in finance, or have you not maybe considered finance but you're looking for a new career? Here's kind of a foot in the door, and what we do is we use that funding to pay for their CII membership and their exams and their textbooks, and then we give them training and we give them mentoring and coaching, and we help find them a job. So that again is kind of,
Brilliant.
often people, it's career changes, it's people who've wanted to get into finance but couldn't take a step back from the day job. Maybe they've already got kids, maybe they just couldn't afford the studying alongside it. But again, it was that vicious circle of hearing people saying, in finance, people saying nobody chooses career in finance, we're not getting enough people in. But then actually me talking to people who were saying, I really want to come into finance, but nobody will give me a job because I haven't got any experience or a qualification. And it's just, it was just making me bang my head against a brick wall. So again, we're sifting through them now. We're launching another 2 intakes of that this year, of that programme. And when I last looked last week, there was something like, we've got 10 slots on the next intake, and there's something like, I want to say like 204, 205 applicants that are in for it.
Wow.
So, like, genuinely, when people say nobody's choosing finance as a career, like, they want to. I know it's, basically the more we can basically within the foundation, the more we fundraise, the more initiatives we can put on. We've done other stuff around like going out to schools and going out to centres to kind of help do some more financial education. But they're the 2 core initiatives within the foundation.
No, that's brilliant, because we do, and I certainly have had quite a few contacts of the last couple of years for exactly that, career changes. People of actually quite different ages. Some are still early stage career, but they've just realized that whatever they're doing isn't really for them. And they might have a sort of personal interest in finance and want to explore. Or people even older, they've almost had a successful career for 10 or 20 years, and they are looking to do something differently. But it's always very, very difficult to find that inroad. Where do I even get started? Where do I? Yeah. So that's a fabulous initiative, I think, that you've got there as well. You've got a lot going on, I have to say. A lot.
Yeah, fair play.
Great stuff. Great stuff. And we've talked about it, Cathi, and we all know the problem. In the olden days, it was the insurance companies were the conduit how you got into financial services. You stumbled into it, didn't you? We all kind of stumbled into it through insurance companies, and then you make the jump to the advisor side of things. Well, those days are gone now. So what you're doing is amazing work. I'm conscious of time. I know you're a very busy CEO, but you don't outsource the school run. You've got to do the school run in 7 minutes, to your credit. So a couple of questions. One of them's a lame. One of them's a half volley. You can easily back. But the first question: if you had a magic wand, what would be the one thing you would change in this thing of ours, in this world of financial services? What's the one thing you think, this could be changed for the better?
What would I change with a magic wand? I would change businesses' perception of compliance. I feel like it's just like this big rhetorical, theoretical beast, and sometimes the kind of the support that I think a decent compliance, internal provider, external provider, whatever it might be, I think to have somebody that just helps your business navigate everything, and in doing so stick within the FCA rules, and in doing so protect client, but ultimately help you run your business. I think it's such a positive thing, but trying to shift people's mindsets from just hating on compliance and thinking it's the worst thing. I think it's self-defeating.
That's a great answer. My second question is a much easier one for you to answer. What's the best way for people to get in contact with you?
Oh, that is an easy one. I would say my email. So it's just Cathi, CATHI @weareverve.co.uk. That's the best way.
Okay, that's lovely, because I'm sure they're going to be Trappists listening to this who are just thinking, you know what Cathi Harrison has just spoken about in the various different things you offer. There's going to be some interest, and I hope you do get the Trappist on board. Cathi, you're with us for maybe 5 minutes or at most. The next section of the show is where we answer a Trappist question, and the Trappist question on the slate is quite opposite, given you're on the show today. So can you hang around for 5 more minutes while we do the Trappist question?
Absolutely.
Okay, great stuff. So, and I know the Trappist question is on the slate, and it's the next thing up because I can see Posty is at the front door. She's dragged the bulging sack of Trappist questions, and this is where we answer one. If you want to leave a question for the Trap Pack to answer and our guests, then please do click on the link in the so-called show notes and also on the pinned tweet on X or the pinned X on tweet. We will get to your questions. We're working through them. This question is from Lee Denham. Lee spelled Lee, which I guess is the male spelling of Lee, so I'm assuming it's a chap. His question, though, Cathi, this is why it is opposite. Could we have a show dedicated to the girls if one hasn't been done already? There are many excellent advisors in the industry of the fairer sex who, I would respectfully observe, face a different set of challenges to those of the traditional stereotype of the 50-something male. What's wrong with a 50-something male, Lee? It would be good to hear their perspective on these challenges and what the whole industry can do to help them become as successful as they deserve to be. So, Cathi, is there an issue? Okay, we know that females are underrepresented in the advice sector and quite massively. Do you think that's an issue? And what do you think we, as a profession, could be doing to encourage it further?
Okay.
on the spot stuff here.
I should have booked in after school club, shouldn't I? Do you know, again, I think sometimes there's kind of headlines. I think there's a lot of rhetoric in the industry. We just had our conference 2 weeks ago, and twice I was stopped on the day by people saying to me, oh, like there's so many women here. I didn't realise there was like this many women in terms of like the split at a conference. And I know Andy used to work with Tina, and she used to always say, her favourite thing about finance conference was that there was never a queue for the ladies' bathrooms. And actually, at ours 2 weeks ago, like there was a queue. It was really annoying. So I do think there is. I think it's getting better. I think it ties into the whole bigger piece of how do you get the kind of independent advice firms? How do you get this kind of broader range of people running advice businesses? Because that's going to attract a broader range of people to go and get financial advice who maybe previously wouldn't have thought it was for them. And again, I think it's just, again, somebody had said to me, so we've got Darren on our leadership team now, and he's our first man on the leadership team. So in 16 years, it's been all female leadership team from Parasols right the way through to Verve. And
wow.
We're like, oh, I suppose we'll have to let a guy in, let's not be sexist and kind of make that change. And somebody said to me, like, was that kind of by design that you ended up with all women on your leadership team? And it absolutely wasn't, but it works in the same way that it does the other way around, in the sense of I was already there running it as a female, so then women are more likely to apply to my company, and then they're really experienced and they're amazing, and then they get, elevated up. In the same way that it goes the other way around, if you just see a company that's all men, you're going to naturally see a higher proportion of men that apply to those roles. So I just think it's always about that kind of, being the person who'll stick your head above the parapet a little bit, like kind of show that there are roles for women in finance, being open to talk to them all the time. But it's definitely getting better. I just think the whole of finance is just kind of getting much more inclusive than it ever used to be.
Wow. Great
Yeah,
stuff.
great answer. I'll just chip in. We're open to discuss any topics that are, relevant to this mighty profession. If there's any female advisors listening that think there are unique challenges that female advisors face, then please do get in contact, and we'll hopefully get you on the show one day. So yeah, that's my 2 pence. Nicholas?
I have nothing further to add, really. I my views about this kind. I think some professions are just leaning towards different sexes. The teaching profession is 95% female, okay, and the advice profession.
Yep.
You don't want it to be equal 50-50 because that's forced then, and that's not right. But definitely, we need to have more female. I think we need to have the health of the profession to appeal to female clients. We need to have more female advisors, and whether we should have a show about it, I'm not too sure about. And here's where I get a little bit abrasive, Cathi. Don't take this the wrong way. There's nothing stopping female advisors launching their own bloody podcast. Crack on. So
I think that'd be great. Like a
I think it would be great.
four female advisors just chewing the fat. I think that'd be
Chewing the
popular.
fat.
Actually, I'd tune into that. That'd be good.
I think there's like a few different things there, which I would say, like, I absolutely agree, Nick. I think some professions naturally lean towards particular genders. I think it's thinking about why that is or what it is. So for teachers, obviously historically women were very much considered the caretakers, and that leans itself to the teaching profession. I think finance historically was considered very salesy, and then that was what was very naturally male. I think actually, if you look at finance as it is now, and when it's done properly, I don't think the skill sets needed naturally lean either way. Like, I think any kind of empathetic, supportive person can be a really good financial advisor. So I think the misbalance at the minute is an overhang from what used to be a very different industry that we all worked in to the one that we're in now.
Yeah, that's a really good answer. You're an example of that, aren't you, as well, of course, because, you had all these ideas while you were, you just giving birth to your boy kind of thing, and with the tech now, it can be a lifestyle business. You can build if you're a busy mum or whatever, you can build a business around it using the tech. It's not that you've got to be clocking in at 9 and leaving at 5 kind of thing. So it's definitely a different world. But the sales point is it used to be quite an abrasive, aggressive world. It was sales targets. It was very machismo. It was getting that going on, that winning that vacation. It was Glengarry, Glen Ross. Who's going to win the steak knives this month, kind of thing. And it's not that anymore. So that's probably good.
And look, Nick, if I just to kind of wrap this up, I think that if you're looking to build a team like Alan has or like Metis, it is really important to get some level of balance in there, because we struggled, and it's funny, when we were kind of on our growth trajectory early on, we did struggle to recruit women, even though we really were trying to recruit them and we couldn't. And something just felt a little bit off. So now we have a better balance. It's not perfect, but we do have a much, much better balance. And I would say our culture is much better off as a result, because you do need to have that kind of balance. And males and females, they do bring different things to the party. And I think, if you're going for any kind of a team environment, just be very careful with it, because we were kind of heading down the Wolf of Wall Street for a while there, and it wasn't. We were, and I've spoken about it with you guys before. It just it felt a bit ick.
Yeah.
So I think the balance is really, really important. And
I mean,
and look, I know
we steak knives though.
Yeah.
But we do get a bit of grief that there's 4 boys, and we tend to talk about kind of boyish things and all that. We can't help that. That is what it is. So I just, that's the bit of criticism I don't think we deserve, because it is what it is. But do I believe there should be balance in teams, no matter what industry or profession you're in? I 100% I do.
Great stuff. Ultra Tybo on this.
I've got nothing to say, Nick, because my hand's still up. Sorry, mate. You start doing it. I think Cathy's got to go.
You're still not good with the tech.
Cathy, Cathy, we are literally 5 minutes from the close. So, do you want to stick with us for the close?
Don't stress.
You've got to go.
You've got to go. Just Cathy,
I'm
go.
asking
I'm
not mansplaining. I'm asking.
And ride my son's scooter.
Yeah, no. You go, Cathy. That
I
was
wish I
awesome.
could.
Thanks for
Sorry,
joining us.
I am really quite
No,
late.
that's great. Absolutely brilliant. Thank you for your contribution.
Thank
so
you.
much.
Thanks,
Thanks for
guys.
coming on. Catch up soon.
Brilliant. Thank you, Cathi.
Go well.
Bye.
Classic Lincoln not reading the room as always.
Not at all.
Exactly.
Not at all. Classic Lincoln asking for.
He's like,
her
got
opinion.
3 minutes.
Not telling her,
3
Andrew.
minutes.
I've
We've got
literally-
another 5 minutes if you'd like to stay. Oh, and another 5 minutes.
I'm just being very polite,
poor
Andrew. I'm
child
using the
standing
emotional
at the school
intelligence that
gate.
you don't have.
You
in
don't remember
spades.
the school runs, do
right,
you, Nick?
let's
It was
move
so
on to
long ago.
Culture Corner.
Anyway, wasn't Cathi amazing?
Yes.
No, she's amazing.
She's great. She's a force of nature.
Force of
Bundle of
nature.
energy and a burst of inspiration. That was class.
Very good.
Fair play.
Very good. Okay, let's move on to Culture Corner.
Inner Excellence by Jim Murphy.
You got it. You got it.
Well done, Carl.
I read the notes.
So a book.
Our chairman, Tom Tierney, from time to time recommends books for me to read. And I always go, there's a reason he's doing that. So this one is brilliant, right? It's about, it's by a guy. I think the book is out a good while, but it was made very famous when a wide receiver in the NFL who's very famous apparently, was seen reading this book during the game. So he was trying to kind of coach his brain during the game. So this one kind of got propelled, whereas before it wasn't that well known. It's he talks about mastering your thoughts, detaching from outcomes. So, doing your systems, doing your processes, and then living with purpose. But the book has those kind of broad three themes, but done through examples of leaders you might know or sports people that you might know. So I love that kind of saying, and this is what happened, this famous person. And you may or may not know a lot of them, but really well written. I loved it, and I would recommend it to everybody on a business journey of any description. I thought it was a brilliant.
Did you read it, Carl, or listen?
I didn't read it because I can't read. I'm trying to read a book at the moment. I'm just back from a few days in Madeira, and I was on the plane trying to read a book. Going, what is wrong with me? Like, I don't know. You
just can't concentrate for a page.
I cannot do it. I cannot concentrate.
It's so funny, isn't it? How we're all different, but you listen and audible, yeah.
Yeah.
And, very good.
Yeah, I've gone back to reading rather than listening. I cancel my
go through these things.
Okay,
all right, that's good.
Thank you, Wodge.
I'm next. I want to talk about someone called Elon Musk. You may have heard of him, Carl. I know you're a big fan.
Elon Musk.
I don't know. He comes in for some steak, but oh my God, that guy. I will state in my opinion, he's the greatest entrepreneur ever to have lived in history. Ever
by a mile, and he's just getting started. Yeah,
I mean, the two things. I mean, I've thought that anyway, but so when I see things, new interviews and what have you, I tune into them. There was one we've often mentioned on this pod in the past, the All In podcast. The All In have just had their summit. Actually, we should take a few ideas and tips for our Trap Live in terms of how they've done it. But they just all get together. All In podcast summit, 2 or 3 days in California last week. And they interviewed Elon, and it's just mind-blowing what he's doing. They're asking him everything that's going on at SpaceX, what's happening at Tesla. What's the name of his robot company? Forgotten that now.
It's within Tesla. Well, there's
Tesla, but the stuff they're doing with these kind of humanoid robots that everyone will have in their households in the next couple of years.
They're inside Tesla.
Inside Tesla, and then all the other stuff. And he's just talking about it matter-of-factly. He goes, oh, yeah, there's that and there's that. And the difficulty of making a human hand robot versus putting someone on Mars and intergalactic travel. It's just a mind-blowing conversation, about 40 minutes long. And I watched that just a couple of days after listening to a podcast that I think Andy listens to called Founders. The Founders podcast is a guy who reads books, and he reads a lot of books. Then he just reads out effectively his summaries of the books. He's done Elon a couple of times before, but this is a new version of the one he's done for Elon. And it's really just about Elon's operating system, how the hell he can manage 6 or 8 different global multi-billion-dollar businesses, all doing revolutionary things, all at the same time, whilst tweeting about 26 times a day as well. So it sort of unpacks all his sort of day-to-day, how he lives, how he operates, how he engages with staff, people, colleagues, and so on. It's mind-blowing. I listened to, as I say, both of them in the space of a few days, and I was very inspired, shall we put it that way. If you could live your life 0.01% of what Elon does, you'd be quite successful.
But this is my point about him, right? I don't argue that he's the greatest entrepreneur ever, and will be seen. Probably history will take out some of the dark side, and it'll just go, he achieved this, this, and this, because that's what history does. I just, number one, I can't get inspired by him because he's an absolute freak. Like there's none of us can operate. A freak in a good way in terms of the amount that he achieves in a 24-hour period. Yeah. For any of us to try and emulate that, I think is pretty bloody pointless. And
he's still popping out kids all the time. I wonder how he does it. It's a wonder.
Yeah, but the values.
Not for you, Carl. That's right. No. He'll be disappointed. He'll
be disappointed.
But still, we love him.
Yeah, okay. But I think be careful who your heroes are.
Okay. My culture corner is also actually on the All In pod. Obviously, we haven't talked about it, and it's nothing to do with this thing of ours. But the assassination, the murder of Charlie Kirk, pretty seismic event over the last couple of weeks. I'm still trying to process it. I know you've taken time on this as well, Alan, and it's just a shocking thing. And the All In pod, where they talk about the assassination of Charlie Kirk, given that all 4 of the All In pod, even Sachs, were once Democrats, liberal, tech bro, Silicon Valley, classic Democrats, and this episode is it's the first 40 minutes of the last All In podcast. They talk about it. It gets quite emotional. Even Calacanis talks some sense and so forth. But the very reason, as ever, Chamath Polly put the kettle on. It is very insightful. The guy gives his view on what's going on in America, and you might think, well, why does that matter? Well, it does matter because what happens over there tends to happen over here. Okay, we're downstream of some of the nonsense that goes on over there, and I think we'll look back. I think we'll all, even people that aren't politically motivated, are interested. they're going to remember when that young father and husband was shot in front of his family, and I think hopefully it'll be a tipping point and won't see a further descent into anarchy. I don't know which way it's going to pan out, but I would give, even if you're not a fan of the All In podcast, I know Carl, you're not as in love with it as you once were by a big. I would listen to that section of the show when they talk about the Charlie Kirk thing, because
look, I have, and imagine if you just dropped your daughter off a week before for her 4-year embarkment on her college scholarship adventure. It's worrying, very worrying.
Yeah, well, yeah, of course. Okay, and ultra Uber users.
I'm going to close the show off.
Bring it on. Let's lift the
corner.
spirit. Let's talk about IKEA wardrobes or something
The
else.
profound recommendation to close the show. If anyone's a serious Uber user, an Uber Eats user, they do a membership program called Uber One. It will save some people that listen to this hundreds of pounds a year, definitely. Check it out. It's a decent membership scheme. That's it. Over to you, Nicholas.
It's like a rewards card system that you have in your supermarket, like something like that, is it?
It's a bit above you, Carl. It's app-based. You got apps in Ireland? Play the draw.
Okay,
everybody.
We made it through to the end of episode 80. Thanks as ever, dear Trappist, for your time. Another episode slides down the U-bend of Father Time. Please do leave a review, as Ultra said at the start of the show about 3 hours ago.
Please.
We've run out of reviews, and we help the algorithm. If you keep giving reviews, we keep going up the podcast visibility things, and we're just more prominent. And it also helps us because we've got massive egos, as you might have guessed, and we're all thin-skinned, and we're vain, and we need to hear that we're doing good stuff for you. So until the next time, it's adios from the Trap Pack. We'll see you on the other side. Take care out there. And that was a good show today. Enjoyed that. Thank you.
All right.
Bye-bye.
Bye-bye.
Goodbye. I think there may be a delay thing for Apple users.
Is it?